This is Alan Bush with ADMIS. Stock index futures sharply higher today. We did have several economic reports coming in better than expected. Jobless claims at 365,000. The guess was 370,000. We had the ADP employment report showing a 201,000 increase against the guess of 140,000 increase. Also, we had Mario Draghi's bond purchasing plan revealed today. This helping the Eurozone, which in turn helped stock index futures globally. We have seen futures breaking out to the upside after a period of about 2.5 weeks of trading sideways to lower. Until today, stock index futures have underperformed the news. We're inclined to believe that the strong gains that we are seeing this morning will not follow through. Keep in mind that September is one of the weakest months historically for stock index futures. So I think the gains that we're seeing today are an opportunity to liquidate longs if you have any longs left. Over in the foreign currencies, the euro currency higher in anticipation of this bond purchasing plan by the European Central Bank. Some support when the ECB announced that they were leaving their key interest rate unchanged at a record low of 75 basis points. Analysts were divided whether or not they could cut rates down to 50 basis points. However, once we did get the news that the ECB is going to implement their bond purchasing plan, some profit taking coming into the euro currency. The fact that Draghi indicated that the bond purchases would be unlimited, but that they would be sterilized, I think is probably a negative factor. For the most part, what we're seeing is any bonds that they do buy will be offset by the same dollar amount, or euro amount in this case, of reserves liquidated elsewhere. So the net effect on the books is zero. This does, however, have the effect of buying time for the financially strapped Eurozone countries to get their financial house in order. Longer term, we feel this will not resolve the financial issues in the euro area. Do have plenty of other problems. For example, France today announcing that their unemployment rate at a 13-year high. So from here, I would expect lower prices for the euro currency. Even though we're higher over the last month or so, we still feel the 120 support area will be breached. In the Australian dollar and the Canadian, we are seeing a tendency for spreaders to buy the Canadian dollar and sell the Australian dollar, with a lot of the economic problems geographically closer to Australia than to Canada. This spread should continue to work in favor of Canada. The Canadian dollar likely to gain on the Australian dollar. And in the credit markets, as stock index futures trading higher, this bond purchasing plan revealed today in the Eurozone. Credit markets under some pressure as flight to quality longs are liquidated. However, we do feel that the problems that we are seeing in Europe will not go away anytime soon. We are seeing a trend toward deflation in various economies around the world. Prospects of easier credit from major central banks will support the credit markets longer term. So from here, I would expect a recovery from these lower levels in the treasuries. Longer term, I think we can see continued strength overall with a possible test of contract highs. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.